Hi traders, this is Thiago and welcome to Bull or Bear Futures channel. If you're not a subscriber, please subscribe to the channel and leave your like in the video. Today I'm gonna talk about something really interesting, that is to look the breakouts through the order flow. I have here an example of an ascending triangle in a bullish market that through the flow we could understand that it was a false breakout and this could lead to a counter trend trade. Let's pass here to the example. If you see here in the 2-minute chart in the bottom left, we have market until current time has in a clear uptrend, and it spent maybe how much, 10 minutes, 15 minutes trading sideways and making the triangle. Okay, here at the SuperDOM we see a big range from 2750 to 2950. Okay, look how big is the volume in that region. At the same time, if you see here at the volumetric bars, we see also that buyers were absorbing seller aggressions. So this is a condition that we could expect a real breakout. But look here at the volumetric bars. We see buyers making aggressive orders, but sellers absorbing. And look at this exhaustion at 31.25. This is a clue about false breakouts, because when you have, if the players forced for a long time, and then when succeeding in making the breakout, they fail, they buy only 1, 2, 10, 30 contracts. This is a clear clue that it could be a false breakout. I don't advise to enter immediately, but continue seeing the context, the developments. We could see that buyers were really weak. You see here at the 36.25, we see that buyers were making aggressions, but sellers absorbing. Considering we had the exhaustion before, I understood that we could enter in the end of the range here at the, it's clear to see here at the SuperDOM, and leaving a stop, putting the stop loss right above the top. Okay, because if it moves upwards, it would be clearly, it would be more likely to see it really breaking out. But I understood that considering the exhaustion and then the absorption in a lower level right at the end of the range, even though we were in a bullish market and it was strong, it could break out, I understood that it worth the risk. Okay, so after entering, I started following up through the volumetric bars, because here, around here, right here at the 27.50, it's the lower end of that range. Then price could stop around there, could try to recover from there. But through the volumetric bars, we could see that sellers kept putting pressure, and at the same time, when buyers were trying to defend, sellers absorbed. Look here at the 27.50, 27 to 27.50. Okay, so we could see that buyers were trying to defend, sellers were absorbing all this. Then it was possible to hold a bit longer, since I was seeing that move could reach there, could continue. But look here at volumetric bars, the region of 25, and at the same time at the chart, we were right at the moving average. And here we see that there was another range starting there. And through the volumetric bar, we see a huge volume already traded there. Since we were in a counter trend condition, we had a strong bullish trend, and this was a counter trade trend. I understood that getting stuck here, it could work. It would be better to close if I see a signal that could be a reverse that could against my position, I prefer to close and assure the almost 4 points the trade had gave me until that time. So this is an example that shows what I'm always telling about, that the order flow could help us through the chart. The chart in this case, the chart has shown me that there was possibly a good opportunity, and through the flow, I understood if it was better to hope a real breakout, and then after breaking, I could wait for a condition that led me to a long trade, but in this case, it was the opposite, and then it was better. It was clear for me that it could move downwards, and then a short was the best alternative, even though we were on the daily highs. Okay, so hope you have enjoyed. If you like this video, leave your like here, and hope to see you on our next videos.